So today we're going to be unpacking the 2026 property forecast for Newcastle and Lake Macquarie areas. If you could buy a $600,000 apartment or a $12 million waterfront. You know, you look at, I guess, some of the year-on-year growth in Newcastle to start with. The variance between suburb within the same LGA is massive.
And was Newcastle's top performer for the past 12 months at 16.5%.
You can't just pick an LGA and go, I want to invest in Newcastle. Because certain areas will perform a lot better than others.
Predictions for 26. So a lot of people just think Newcastle as a general high level market, but Newcastle split into Newcastle, Lake Macquarie, Hunter Valley and Maitland. There's sort of different areas. So today we're going to be touching on Lake Macquarie and Newcastle. What's happened over the past 10 years and 12 months and what's to come in 2026 and what's driving it.
So I guess if you look at some of the growth over the last 12 months first, sometimes you need to look back before you go forwards.
Absolutely.
But, you know, you look at, I guess, some of the year-on-year growth in Newcastle to start with. The variance between suburb within the same LGA is massive. And that's something that we always say is you can't just pick an LGA and go, I want to invest in Newcastle. Because certain areas will perform a lot better than others. But then there's also ones that have got false readings in there, especially places like Bar Beach where they might have had some huge sales in there the previous year. You know, they might have had a couple of 10 millers in there, which then brings the year-on-year growth down. But in fact, it actually still has gone up.
And that's the thing. When people are looking at a lot of data online, statistical reliability is the thing. If you've got Bar Beach, I don't know how many, the Junction, I know there's roughly 400 property addresses there. But last year there was only 22 sales. So then you compare that to a market like Mayfield that has 1,500 addresses and probably north of 150 sales. And the level of sales of Mayfield, that 150 would probably vary between 800,000 and 1.4 mil. The Junction, you're looking at a difference of $600,000 units to $3.5 million houses.
Same in Bar Beach. You could buy a $600,000 apartment or a $12 million waterfront.
So it really depends on what's selling and how much is selling to have that reliability within the data.
So we look at that. Bar Beach was actually negative 0.86%. Cooks Hill 3.51. But then we go further down the list. You know, you got Jasmine at 10.64.
And Waratah West was Newcastle's top performer for the past 12 months at 16.5%. So, you know, applying that, it's done double the average growth of a good market.
Which is huge.
So, you know, when you're just looking at Newcastle generally, there's such a difference between what market you're investing in. And it all comes back to the standard fundamentals of who's buying it, what's their income, and what property types are they looking to purchase.
And then Lake Macquarie, similar sort of things. You know, Lake Macquarie is geographically a much bigger area as well.
It is,
And you've got, you know, the west side of the lake, the east side of the lake, south, north. And they all perform quite differently. So you look at Cardiff South, which is 1% year-on-year growth.
Well, that's only 1 year growth. So Cardiff South has done 1% growth over the past 12 months. Whereas, you know, Valentine, which is closer to the lake near Warners Bay, it's done 8% growth over the same period of time.
Correct. So, which isn't far either from each other.
No. So there's a massive difference, and it all depends on, like I said, who's buying the properties and what property types they're buying. Which is going to influence that particular market. Doesn't necessarily mean that Cardiff South is going to do 1% next year, because Cardiff South is actually one of my top picks to be buying in.
I've always liked that area. I really do. It's so close to Warners Bay, and it's a really good spot. You got the bypass that's right near it. Cardiff South has always been.
Well, you look at the typical price as well. Valentine is 1.237 million. Cardiff South at the moment is 961,000. With the incentives for first home buyers entering the market, and because interest rates have risen, it's much more affordable to investors to enter that market. So you're going to have a bigger cohort of buyers in Cardiff South compared to Valentine over the next 12 months.
And Lake Macquarie and Newcastle fit under the major regional capital under the first home loan deposit scheme as well, or the 5% no LMI scheme.
Yeah.
So there, I believe the price cap for that is 1.5 mil.
Yeah.
So then you go out to say Maitland and those areas out there, it drops quite substantially down to about 900, I believe, off the top of my head. So these areas where the price caps are going to be higher will allow for a lot more drive in price in that area.
And that's it. Like affordability is a major thing as well.
Yeah.
So we've got to be looking at the sort of the macro and the micro, because a lot of the growth over the past 12 months have had different levels of interest rates. What we're going to have in 2026.
Yeah.
So that's one thing as well.
So to start then looking at what's going to perform well over the next year, which is what we're doing today, you need to sometimes look at some of the infrastructure builds, which is what we'll go through now. So we've got the airport, the Broadmeadow master plan. Did you want to run through that?
Yeah, I don't have too much information for the Broadmeadow master plan, but they're basically transforming Broadmeadow from what it was existingly, which was really heavy industrial area.
Lots of shop fronts and
exactly, shop fronts, work sheds, a lot of train lines out there. Yeah. It's basically Newcastle has gone out instead of going up.
Yeah,
and Newcastle's sort of limited for how far it can continue to go out. And they know that affordability is an issue, so they've got to increase density to allow for more affordable housing in these higher density zones. And Broadmeadow has a lot of the land available to basically build a new city.
Yeah.
So for anyone who wants more information on the master plan, just Google Broadmeadow master plan and it shows you exactly what it is. But that's just one of the big infrastructure projects that will sort of roll out over the next
airport
next 10 years.
expansion. That's been a brilliant one for the area.
Yeah.
So what that is, they've converted the domestic airport in Newcastle into an international terminal. I believe they're doing multiple flights a week to Bali at the moment.
Yeah.
New Zealand's going to take off soon. They're doing direct flights to Perth now, Adelaide.
Yeah.
I believe Hobart is going to come next year as well. So the airport expansion is just creating that ease of accessibility to Newcastle, which again will drive prices.
Which is, that relates back to economic diversity, because we have specific industries in Newcastle, and Newcastle University is a big contributor to our economy. And the airport always was, but the expansion is just allowing for more tourism. To Newcastle. So tourism to influence the local economy is going to be really important. But some of the biggest ones, John Hunter Hospital, there's $1 billion, well, they tried to keep it under $1 billion, that's blown out.
Yeah.
But John Hunter Hospital, $1 billion expansion. John Hunter Hospital is one of the biggest in the country.
It's already one of the best hospitals in the country.
And it services such a large area. So for it to expand, you think about what influence that's going to have on money in the economy and the people buying in Newcastle. It's going to be a lot of specialists, a lot of doctors, a lot of other medical professionals, nurses, and all of the support staff that come with it. To complement John Hunter Hospital airport expansion, they're doing a few things with the M1 extension, which is a freeway from Sydney, which instead of stopping at Beresfield now will extend past Raymond Terrace.
I believe that's not far off either.
It's going to be complete in 26, 27, I believe.
Yeah, so I believe the first part is the connection between the end of the M1 at Beresfield to Hexham.
Yeah.
And then it's Hexham bypass, Heatherbrae bypass is the next stage as well.
Yeah.
So they're not far off.
No.
I went north not long ago, literally last weekend, and there's a lot of work happening here.
Yeah.
So
to complement that M1 extension with the John Hunter Hospital expansion, for anyone familiar with Newcastle, a lot of people travel through Crowder Street in Newcastle Road, which is just
it's banked up.
It's residential zoning. It's 50-kilometre speed limit or 60-kilometre on Crowder Street, and it's basically just a bottleneck for two intersections meeting. They're doing basically a highway bypass, which will bypass Crowder Street and Newcastle Road, and have a direct off-ramp into Newcastle, John Hunter Hospital.
It connects with the bypass that goes up through Shortland and brings you out at, is it Mayfield, is it?
It takes you out to Shortland, which connects you to that
Sandgate.
Hexham bypass, which is where that bottleneck is as well. The reason why I keep touching on that Hexham bypass is you've got people, and we're not touching on the Hunter Valley here, but you've got people commuting from the Hunter Valley and Maitland to Newcastle, and basically they meet the people coming up from Sydney heading north. And that's why all of this complements each other, because you're going to have traffic on the M1 freeway completely bypassing Hexham Bridge. And then you're going to have people from Maitland coming through Hexham, which is going to fast track or shorten their commute times to Newcastle. And the reason that's important is because at the moment, it takes 30 minutes from Newcastle CBD to get to Maryland, which is the outer suburbs of Newcastle, and it takes 36 minutes to get to East Maitland, Metford area.
Yeah.
Once that Hexham bypass and the M1 and freeway extension's done, it's going to take 25 minutes to get from East Maitland and Metford to Newcastle CBD.
And that makes those areas a lot more appealing.
Because you can buy a 4-bedroom house in Metford, East Maitland for $750,000, $800,000. So we're not touching on that area, but that's going to be a growth area.
We have mentioned in a previous episode that Maitland, East Maitland area, New South Wales government infrastructure report listed it as one of the highest population growth areas in Australia.
It is. So moving on from that, we're not touching on Maitland. That's probably another episode. But a big factor to consider is the LMR and the TOD zoning, which is basically the New South Wales government trying to increase density in a lot of areas. That includes Belmont, Jules, Charlestown, The Junction, Adamstown, Katara, Mayfield, Waratah, Bullaroo, Cardiff.
Yeah.
What that's basically doing is increasing building height limits from 8.5 metres to 22 metres, which for homeowners is going to have a direct effect for potential development for your land, but it's going to be a potential negative impact for people who get shadowed in by developments. But there is an opportunity there at the moment where people don't realise what they're sitting on. In terms of, again, population forecast is very similar to the year-on-year growth for the different suburbs of how fast they're growing. There's different suburbs that are growing at a faster rate than the broader local government area. So I'm not going to touch on any of the population there, but it's important to have a look into that. Probably good for a wrap-up now.
So,
I reckon,
if you were to pick some suburbs in Newcastle, so obviously we've talked about the infrastructure now.
Yeah.
You know, I'll put you on the spot.
Yeah.
Pick one suburb in Lake Macquarie that you think is going to perform well in 2026 and one in Newcastle.
So one that will continue to perform long-term, which was my top pick, was Cooranbong.
Yep.
But I've been buying there recently for the last 6 months and it's grown by 8% this year. So you've already missed a little bit of the boat.
Yep.
Still a really good area for an owner-occupied purchase. Cardiff South is still a good market right now to buy in.
You get a bonus one. There's two.
There's two. For Newcastle, my top pick's Hamilton.
Yep.
And you know, when you look at Hamilton, typical price of 1.2 million, its two closest neighbouring suburbs, Hamilton East and Hamilton South, 1.9 million typical price. There's a difference of 600,000-700,000 in price points there, and it's very well located.
Yep.
For its positioning and proximity to amenities.
And I think two that are not listed in the in Lake Macquarie or Newcastle would be that Raymond Terrace, Medowie area, and then also East Maitland for anyone that's out there.
There's so
we could keep going.
You could keep going with specific scenarios. You know, are you looking as an owner-occupier investor? Do you need yield? Are you just focused on growth? Are you looking for a development side? Are you looking to do renovation? There's a plethora.
Look, we might be biased because we live here, but I think Newcastle, Lake Macquarie, Maitland, Port Stephens, all of these areas are going to do really well over the next few years.
Well, a big thing for me as an investor is we've spoken about risk profiles. Some people are happy to accept a little bit of volatility within markets because they might not need to sell at any point. They're happy to sell in a bad, or if it's a bad market, they're happy to wait for 2 years for a good market. With some of the good suburbs in Newcastle, there's just a balance. Instead of having 16% growth like Waratah West did and then complemented by 2% growth next year, some good suburbs in Newcastle, just like the Junction, they just do 7-8%, 7-8%, 7-8%. So it depends on your risk profile as well.
Yeah, and it's location as well.
Yeah.
You know. But that's it for today. We'll see everyone in the next one.
See you in the next one.